We love to work with military. Obviously, we're both veterans. We understand how important it is to. We got paid absolutely crap when we were in the military, right? We did it for service. People did it for a variety of reasons and stuff. So I'm just such an advocate of helping military veterans like really build wealth for their families and just understand there's more to investing than just the stock market. Right? So we really try to cater and teach and educate. So that's the things I do now. Is really educate on this space, particularly if they want to jump into real estate.
Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder, and CEO of Zana Investments, Tim Little. And on today's show, we have with us Justin Mosley. Justin is the owner and co-founder of Lestermore Capital, a real estate investment firm that helps veterans, business owners, and sophisticated investors generate returns through the acquisition and management of short-term rental properties and other unique real estate opportunities. Justin, welcome to the show.
Thanks for having me, Tim. Appreciate it.
Yeah, and it's great to have you here. Always good to have veterans on the show like myself.
Sure.
So I gave everyone a high level overview of your background, but on this show, we really like to get into the details of how you got started on your journey. So please take us back to the beginning and tell us how you got to where you are today.
For sure. I'll go all the way back. I'm actually a guy from Baltimore, Maryland. So I don't know how many people know about the city, but it's not great. So I was one of those guys that after high school, I was trying to find opportunities. So the military was my path. And I always wanted to travel. So the Navy just seemed like the logical kind of place to fall. And I actually was really fortunate. So I went in and I got placed on the George Washington on the East Coast, so in Virginia. And then I got home port change all the way to Yokosuka, Japan. So I literally did a world cruise through the Straits of Magellan to South America, Brazil, Chile. And then from Japan, we were out, every 2 months to Australia, Singapore, Hong Kong. So it was absolutely incredible from that perspective. Just being young, being able to go and experience all this stuff. And it really was kind of foundational to who I am as a person because I ended up eventually getting out and then going on to college. But I feel like I've learned more from just experiencing other cultures, dealing with other people than any of my kind of formal education. But yeah, so then after I got out of the military, I really decided that I really wanted to figure out this making money thing. And I went the traditional route of I went to college after I got out with the GI Bill and then also went off to grad school to get a master's degree and got into the quote unquote professional workforce and was I don't want to say I was miserable, but I think it took some time to really realize that this is not the way to forward. I'm never going to make any real money. I'm always almost like back in the military, constantly have somebody telling me what to do. And like most people, ended up reading Robert Kiyosaki. Although I never read Rich Dad Poor Dad, I read Cash Flow Quadrants, and it just absolutely clicked for me. That's how my real estate journey began. And yeah, that's where I was at.
All right. Yeah. So I'm struck by how similar our paths are in some respect. I came out of high school, literally a month after high school, was at basic training for the Army. And I had traveled internationally before that, but just to Europe, which is not too culture shockish, right? Like you could adjust to it pretty quickly. And when I went into the Army, they asked you to put the top three places that you want to go. And I put Germany because I knew people there. I had been there on a student exchange in high school. And so, of course, they sent me to Korea. And like you, it was like this eye-opening experience because it was just so vastly different than anything I had experienced before. And I was just able to see so many new and different things that it opened my eyes and it got me interested in the international affairs, international studies realm of things. And that's what I wound up doing when I went to undergrad. But I think also like you, after I got off of the military during my second time in as an officer in '08, I got out and like you, I was like, okay, I need to go back to school. Let's do this. Got my master's degree and got that corporate job. And I was like, okay. And I started to get bored. And the whole people that are much younger than me telling me what to do, even though I have vastly more experience in life than they did. And so I found myself getting frustrated at points and was like looking for something else. I think I did what a lot of folks in my position do, which is just I hopped back on military orders uh, for a couple of years. And I was like, this feels better. But I wanted to shift to being my own boss too. And that was when I was discovering real estate, transitioning into that and trying to get more active until the point where I was able to start doing it full time. So talk to me a little bit more about that side of the journey, the real estate aspect, and what was your first intentional real estate investment?
Yeah, for sure. So I guess the lead up to that would be, and it's interesting you talking about Europe because all my military time was in Asia, South America. And then when I came back and I went to grad school in Florida, I met my wife, who's actually English. And so I decided to go to grad school over there. And really, to be honest with you, grad school was never my intention. I thought as an American going over to England, it'd be super easy. I'm like, hey, why wouldn't you guys take me? And they were like, no, you need somebody to sponsor you to go over. So fortunately enough, I had the GI Bill. And I ended up going to grad school over there. But I think during that time was pretty foundational for me, right? When I was reading and trying to think about what I wanted to do, it's really only three ways you can make any real money in this world, in my opinion, right? It's like you own a business, you're really good, you can play the stock market, or you got real estate, right? I'm not gonna lie, my first kind of venture into investing was the stock market. And I learned very quickly, like I am not Warren Buffett. I'm not as smart as he is. I can't analyze companies or executive teams. So that was a huge failure. So real estate was the next best thing that I can do. And then what's really cool about today's times is, the internet, you have YouTube, you have all these podcasts, and I am not a creative person by any stretch of the imagination, right? But what I'm really good at is like listening to other people and taking and applying lessons that they've learned. And one of the biggest things I always heard from people, especially on podcasts, is I wish I'd have gone bigger, faster, right? And then for me, a lot of ways was I wish I didn't sell X, Y, and Z, right? I jumped into real estate trying to go as big as I could, and I wanted to be a buy and hold guy. So that kind of led me into syndication, multifamilies. I was super green trying to jump in, being like a tiny piece of a GP on multifamily deals. And that was great. It worked out, but I think I really realized like, man, there is no cash flow at this level, right? Everything is the money's on the exit, right? 5, 7 years down the road. And being a military guy and getting out, and I definitely experienced that, right? Like you feel like you're behind, which in reality you're not. But sitting in college, like I felt like I was behind, sitting next to 18 and 19-year-olds, and I was already in my mid 20s and traveled the world. Getting into the workforce, I felt like I was behind. So I was like, how can I accelerate this thing? And really what that led me to was buying single family here in South Florida. So I started off buying triplexes, condos in Fort Lauderdale and Palm Beach Island. And I was like, well, let me try to put these properties on Airbnb and VRBO as a short-term rental. And that's when like everything clicked for me. And it's not only you getting the benefits of appreciation, taxes, all the other stuff that real estate guys love to talk about. It was like the cash flow, right? Like I can actually live a good life off the actual cash flow each month that I'm getting from these properties. And that's when the light clicked and I realized this is where I want to go all in on. So still love multifamily, but I think I'm a short-term rental guy through and through at this point.
Yeah, and that's really interesting because you took a different tack. Most people go the opposite way, right? Like
Hmm.
they'll start out with a couple of single family houses, maybe some small multifamilies, and maybe they never get into the short term rental thing. They're just renting it out, whatever. And then they say, "Oh, how can I scale? Let me go to
Yep.
multifamily." Then they start looking at syndication. I will attest what you are saying is absolutely true. So, as a word of warning for anyone who's like passively investing, thinking that they're going to make the big bucks by going active and being a syndicator, it's not that simple. The cash
For
flow
sure.
is not there. Like you say, do we get paid at the beginning of a deal? Sure. There's an acquisition fee. What is that? 1 to 2%. But keep in mind that 1 to 2% acquisition fee is shared among all the general partners,
Yeah.
right? So when you talk about that small slice of the pie that you were getting, it resonates because I think people have delusions of grandeur at first when it comes to how much money you can make going full time in syndication. And it's more of a slow build, right? And it takes time to get that pipeline built out because the problem is exactly like you said, the big payout is when you exit. That's when
Yep.
you reap the profits of how much it has grown in value. So if you build this pipeline over time, then in year 5, you have an exit. And then that next property that you had bought, then it exits. So you can start to see that over time. But those first 5 years, there isn't going to be a whole lot of cash flow coming in. And so I think it was really smart what you did. You said, okay, what's in real estate, what's an asset that does provide that type of cash flow. And I would argue short-term rentals is one of the best ways to do that.
Yeah, for sure. And I think, yeah, you hit the nail right on the head, right? I think one of the greatest things I've heard about real estate, which is completely true, is that it's not get rich quick. Like even the short term rental space, it's not get rich quick, but it is guaranteed to get wealthy over the long run. And I think that's true for any part of real estate that you get into. I think for me and for most people out there, it's figuring out what fits your personality type and what is it that you want to stay in and for the long run because in this game, it's a grind. And if you're not willing to weather the ups and downs, the emotional roller coaster you go on when you're just dealing in real estate, like you're not going to last. And people think you're just going to get in here, jump into syndication, make all this money. Yeah, it's not true. And they get really a rude awakening when they realize, oh crap, like I got to be in this for a long time before I see any real money. But the real money is there if you can withstand, right?
Exactly, stick it out. And I think that's what's happening right now is it's getting a little bit harder, at least on the multifamily side, to find any deals that make sense with interest rates going up. And I think for a little while, I felt like everybody was a multifamily syndicator. I know it's because I get stuck in my little bubble and all my friends on Facebook, on LinkedIn are multifamily syndicators. So it could seem like everybody's doing it, even though that's not the case.
Yep.
But it did become pretty popular during the golden years when people were making money without really trying. And in some cases, getting lucky during the COVID period because rents were just rising so much so quickly. I think now that time has passed and things are actually getting harder, that there's going to be a lot of people who are just like, nah, this isn't worth it. I don't have the time or desire to put the effort in to get this done. And a lot of people are going to fall off, but I think there's an opportunity there as well for the rest of us who stay in the game.
And I
I
think every, oh, go ahead.
oh, no, please.
Yeah, I think every portion of real estate goes through those level of cycles, right? 10 years ago, if you'd have got into mobile home parks, barely anybody wanted to touch them or invest in them, right? They were the belle of the ball like 5 years ago, and you can make a lot of money. Where it's a lot harder now, right, to get into that space. And even short term rentals, like I think a lot of people jumped in during the COVID run, where you can pretty much slap anything on Airbnb and VRBO, and you're going to charge $1,000, $2,000, $3,000 a night because travel restrictions, all that kind of stuff. And now you get into this time where operational efficiency is so important in my space. You have to be a good operator because this game is truly more or just as much hospitality as it is real estate. And that's why you get all the kind of the bad news and publicity about Airbnb bust and stuff. But the reality is, if you're a good operator, you're still making money and you're still getting that visibility. But a lot of people aren't because they're mom and pop, right? They're just throwing a couple properties on, maybe a vacation rental, and now they're not seeing those profits they were seeing in 2021, 22, right? So same thing, just every real estate kind of asset class has these weird cycles that you got to withstand and also understand.
Yeah, and you brought up a great point in there. And I know that short-term rentals, Airbnb, the highly successful operators have systems down to a science. Can you please talk to me about systems and how they're able to make you more efficient, more successful, and just a better operator?
Yeah, for sure. And I think that's where what's really helped us in this space. It's creating those systems that through automations and technology and then leveraging even VAs, if you're not going to go the property management route, the third party anyway, that is going to help you give the best experience to your guests as possible. And it's actually a nice segue into the community that we built. And really, our passion is about helping people, if you want to get into this space, really put those systems in place. So when you do have these slight downturns, that you are still getting that visibility, you're still able to operate at a high level, and you're going to continue to get that repeat customer. So yeah, systems just like the military, man. Like it's all about SOPs and making sure your teams follow those systems so you can all be successful.
Yeah, why don't you give me some examples of what you've been able to systemize in order to become more efficient? So, like even down to okay, get guests signing up, their experience while they're there, and then after they leave, and how those units get turned. What does that look like?
Yeah, so it's a combination of template messaging and then also using VAs really cheap from the Philippines who are awesome, and then using technology, right? So I think One of the coolest things I figured out, and it took a while because I was beating my head against the wall, like trying to systemize like a lot of guest communication, right? So that's a really big piece in the short-term rental space. Creating kind of a roadmap from the moment someone books the messaging, and you can create templates and it automatically goes out to the time that they're going to check in, and making sure that all your locks are automated and they reset so the previous guest can't get in. But a new code is generated for the new guest that's also connected to your templates that go out. And then also from experience standpoint, it's so crucial that you're having those touch points with your guests during the stay. And I say that because this is such a review based business that the last thing you want to do is wait till your guest leaves your property. They're asked from Airbnb, VRBO for the review, and then they get out all the things that you could have rectified or maybe solved before you get to that space. So that was one of the biggest points where I really figured out, okay, if I'm asking halfway or even three-quarters of the way of the stay, hey, what are some things I could do better? How could I make your stay better? That's when you're really going to get that information from your guests. Oh, I wasn't going to say anything. The toilet paper holster is falling off the wall or a sink's clogged, but I didn't say anything. But 9 times out of 10, when they get asked for the review on Airbnb, they're gonna put that in a review that could hurt you, right? But if you're able to solve for that while they're in the property, you send your handyman straight over there, right? And again, this is all through automation, right? You ask these questions, it goes off, your VA is monitoring your inbox, and then they send a message out to your maintenance person, they will resolve it. Like, you can take a 3-star potential review into a 5-star because they're like, "Hey, this person really cares, they're responsive." That's a really big piece of kind of the short-term rental space and making sure you have all the systems, because if you're trying to wing it and you're looking to your phone or the laptop to resolve these issues, life happens, man. You want to spend time with your kids, your family. You don't want to be trying to solve every little issue a guest has at 3 o'clock on a Saturday afternoon. And that's what really can make and break your business. So I said a
Yeah,
whole
that's
lot, but it really systems focused, right?
yeah, and that's a really good idea. Just because you're preempting,
For
not
sure.
only are you playing defense there by preventing the bad reviews, but like you said, potentially you can make it an even better review by showing that you're trying to address their concerns ahead of time. So that's really smart.
For sure.
In terms of the VAs, if they're having to monitor like throughout the stay, and then there's the issue of hours, are you hiring local VAs or are those international VAs?
But no, this is international. So Philippines, I find, has like the best customer service, which is a little ironic because in my travels, the customer service wasn't great in restaurants there. So I don't know what the heck they got going on because they have the best VAs around. And I've tried a
Mhm.
bunch of different countries, but yeah. And then what you can do is, especially if you only have a couple properties and you're not using third party property management, you could hire a VA for $4 or $5 an hour, 2 12-hour shifts, and effectively will cover 24 hours of coverage for your property. And I think that's, especially as people are starting off, that's the best way to operate. So you're getting that kind of full coverage. You're never worried about someone responding to you in the middle of the night. They're going to be up and they can respond and try to resolve whatever issues that may be.
Yeah, and so you don't have any third party property management for any of your properties?
So for larger deals, yes. So we use another actual veteran owned group that we love, that we have relationships with. But I'm really talking about someone who's first getting into it and how they can systemize without charging that or hiring out third party. Because I think we haven't figured that out in this space. It eats away at so much of your profits, right? So property management groups, you talk to some of the bigger guys like Bacos, even to the smaller guys, they're going to take 15 to 30% of your income coming in. And that's a huge chunk of money that is coming out of your pocket versus you doing some quote unquote in-house self-management or property management and just creating these systems yourself. And it's not rocket science. It's really just making sure you're implementing these things and you're taking in all those profits. So I'm really speaking to the guys that are maybe 1 2 3, maybe 4 properties in. It may be advantageous to just put these processes in place so you can keep that revenue. That's the name of the game, right? We're here to make money.
Yeah, wow. I had no idea it was that high. I suppose it makes sense. If you have a single family property and it's just a regular 12-month rental, you're paying 10%. With something that's much more management intensive like this, I guess it makes sense that they would be charging more. I guess I just didn't realize it could be that much more.
Oh, for sure, for sure. You think about it, they're handling all guest communication, your analytics, they're handling your pricing per se. And again, there's different tiers and levels, but like I'm
Sure.
giving you what you will generally experience from property manager. They're handling your cleaning services, towels, like all the things that are really important. So it's incredibly labor intensive, especially if you're hiring it out.
Okay, and talk to me about how you go about choosing a market. It sounds like you're pretty heavy into South Florida, but is
Mhm.
that your only market? And then how do you identify and zoom in on what makes a good market specifically for short-term rentals, acknowledging that the, the reason a lot of people don't get involved is because of the zoning and
Mhm.
legalities involved, which can, like, I've seen change from like county to county and even city to city. It gets pretty crazy on how hyper local these ordinances can be.
For sure, and you're right, it is hyper local, right? And it's all dictated on what the community feel is and really so our thinking behind it is we're really analytics driven, right? So similar to multifamily, you're looking at like kind of population growth and all those other kind of metrics that determine what's a good market and not. We look at it from a different perspective. So from a tourism perspective, it could be because there are a lot of concerts. It really then again, just to back up a little bit further, it depends on your strategy. So let's start there, right? So if you want to be in a more vacation focused market, you're going to look at those vacation areas. If you want to do a more midterm strategy, you're going to look for where are the highest, best hospitals in the country with kind of maybe the lowest housing or hotels or accommodations, right? And that's going to be where it dictates what market you want to get into. Really, from a high level standpoint, it's about your strategy first. But if you're talking specifically about me, I love vacation markets next to urban centers, right? Especially in Florida. I think there are markets people tend to think of as Florida as very seasonal, and that can be true if you're talking about maybe it's thin or something like that. But it's not very seasonal at all. You have obviously the winter time for us, which is our perfect weather, 75 for 6 months, and the birds come down. But then in the summer, you have concerts. You talk about Fort Lauderdale. You have people that are in baseball tournaments all year round. So you really can pick your area based off of what's happening and then really cater to that demographic. So that's what I would say. And then obviously you have to be mindful of the ordinances that take place. And we use a company called Revity who does a really great job at giving us kind of market reports on what are the SDR ordinances, what are the regulations, what are the risks there? Are they in danger of maybe capping off the amount of permits they're giving out, or what's the county feel? And we make decisions based on that. We're moving into the Mississippi market, and we're moving to some areas where they're actually capping the amount of short-term rentals. So the name of the game is how can we build a portfolio in that area? Because we look as a good thing. Because eventually, if they cap off the amount of properties that can be rented short term, that demand over time is going to continue to increase, but the supply is going to be capped. So you're talking about upward pressure on occupancy, upward pressure on ADR. So for me, I get excited where that scares other people away. But like every part of real estate, it's about finding a way to turn quote unquote challenges into opportunities. And that's how we view it here at Lestermore Capital.
Yeah, that all makes sense. So I'm here in the Tampa area. I actually live in Tampa.
Yep.
What are your thoughts on that market? I'm just curious personally.
No, love Tampa. We're actually thinking about doing some development stuff. So we're trying to get creative. We love the Tampa market as it continues to grow. It's funny. I used to live in Tampa. I actually went to the University of Tampa for a little bit. I lived on Davis Island. I had an
Really?
absolute blast over there. Yeah, for sure. So that's for another time. But yeah, I think Tampa has phenomenal metrics. I think there's so much tourism there. We also like being close to military bases. So you have the Air Force Base downtown. The beaches are amazing. Yeah, I think the metrics are very for Tampa and our eyes.
Nice. Okay, so I guess another question that I had, when you guys go into these properties, are you doing the full staging on these and are decorating them, whatever you want to call it, specifically for Airbnbs? I know there's like a certain feel and some go a little overboard, neon signs, whatever, to
Yeah.
have it have a certain feel and make it very Instagram worthy and stuff like that. Is that something you get into or do you keep it, oh, I don't want to say generic because that sounds bad, more palatable to anyone who may be looking to rent?
Yeah, no, that's a great question. I think really it just depends on the market, right? So if you're in a market, let's say in Orlando, a lot of people tend to go, I want to theme by room, right? Like you want to cater to the demographics that are going to the area, right? So like any other business. As we're going into Mississippi, especially the coastal region, it's themed differently than what we would theme for a condo in South Florida or in Charleston, South Carolina. So for us, our thinking is really staying on brand what the market kind of dictates, so what people expect when they go into the market versus trying to stand out and be different. Now, I think there's really no wrong way of doing it. I guess there's a wrong way if it's absolutely hideous and nobody's booking, but I think it's really just based on the operator and how they want to stage their properties. Early on, and it's funny, it's how I actually got my wife into this because like she didn't really care about real estate at all, right? She was building her business. She's an entrepreneur. She's amazing. But I brought her in because I hate that part of the business, right? I like looking for properties. I like wheeling and dealing, negotiating. I like walking them. When it comes to decorating, that's not my jam at all. So I made
Yeah.
her my VP of decor and she loves that kind of stuff. And you really she helped me get a vision on like how these properties should look for the market. And we've operated and extrapolated from there since then.
Nice. Okay. And we have a lot of active duty military and veterans listening to the show. Walk me through how they can get started passively investing if there's any special considerations for military folks.
Yeah, yeah, for sure. We love to work with military. Obviously, we're both veterans. We understand how important it is to. We got paid absolutely crap when we were in the military, right? We did it for service. People did it for a variety of reasons and stuff. So I'm just such an advocate of helping military veterans like really build wealth for their families and just understand there's more to investing than just the stock market, right? So we really try to cater and teach and educate. So that's the things I do now. Is really educate on this space, particularly if they want to jump into real estate. So you can check out our website and really walk you through the different opportunities we have. But something I'm actually even just as passionate about is like creating a community of people that really can, if you want to, maybe you don't have an extra 50 or $100,000 to invest passively, but you actually want to learn this business. We have a community called Airbnb Millionaire, and it goes into it's about giving people the steps to start on this journey so that you're not trying to figure it out on your own. And that's where we really try to cater to veterans, husband and wives that want to do it together. And we want to build it where people can come into this community and know that they're either starting in the same place, they can build connections and also have that kind of support system say, hey, they did it and we can do it too.
Yeah, I think that's great because you're offering different paths, right? For
For
those who
sure.
do want to be a little more hands-on and are a little more entrepreneurial, they have that option through the education. But for those who want to passively invest, talk to me about the minimums. And are you guys doing syndications or are you doing funds in order to get in on those deals?
Yeah, so a little hybrid of both, right? So we have some syndication opportunities available. We're also partnering with a large group to get into a real estate fund. Right now, we're going the institutional route. We're trying to get institutional capital, so we're not open to retail investors. But in the future, that will be something that we'll want to promote and look into. And for me, passion project is if you want to learn this business and partner, I think that's an opportunity as well, right? So you almost have that hybrid of both, right? I want to invest semi-passively, but I also want to learn along the way. We provide opportunities to where you can do both at the same time, almost like a joint venture situation. So we try to not necessarily cater to everybody, but in some ways we do, right? So you have the education piece that, hey, I want to learn how to do this on my own. We have a full community and also even a modules course of a step-by-step walkthrough of how you do every single part of this business up into I just want to invest passively. We have opportunities for that as well.
Awesome. Yeah, and I may need to talk to you later about the joint venturing piece, possibilities doing something there. But I think the other thing that's important, especially for those folks who are like retired military, a lot of people don't think they have the money to invest, and sometimes they're right. Don't get me wrong, but a lot of them forget about these retirement accounts that they have sitting around, especially if they're orphaned accounts. Like they got out of the military 5 years ago, and that TSP with 100,000 is just sitting there and they forgot about it, didn't roll it over into anything else. They have an opportunity to roll that over into a self-directed individual retirement plan with IRA, individual
Yeah.
retirement account, and put that money to work and have a ton more flexibility than what it had in the TSP or any other kind of just regular 401k plan where the only things you get to choose from are different types of accounts in fund A, B, C, which are all stocks. So going into that self-directed route, it enables you to invest in deals like this, to put that money in and you just set it and forget it. And I think that's an opportunity that a lot of people just don't even realize that they have.
Oh, 100%. And yeah, you hit the nail right on the head and yeah, continue to preach that message because and again, This is just my personal opinion. Like, I'm not a retirement account guy. Like, I believe in real estate. I think there's nothing more powerful than actually owning assets or being a part of owning assets because let's be real, look at what's going on in the market. Like, it's a very slim chance that any property that you buy, no matter how horrific the deal, is going to go to zero. But that is true
Right.
for stock market. So I'm all in. But if you have that, or you're in that situation in which you have money just effectively floating in the market, 100% put it in a self-directed IRA. You don't have to invest with me. You don't have to invest with Tim. Invest with somebody. Make it actually work and grow so that you can actually benefit from the hard work that you put in to get that money into the account and actually let it grow in a meaningful way.
Absolutely. Do not let your money be lazy. All
For
right.
sure. Love that,
This is
man. Love that.
this has been an awesome conversation, but we do need to move on to the turbo round.
Let's do it.
All right. So I'm going to ask you three questions that I ask every guest on the show, and I just want you to give me a quick, honest answer. The first one: what is one red flag every investor should look out for?
Yeah, so I'll relate this to the short-term rental business that I'm in. I think a lot of times as people get into this space, they really want to find that awesome property and maybe unique that you've done all your homework, they can do really well, or you think you can do really well. But I always caution that if you cannot take that property and put it as a long-term rental and it does not cash flow, I would always advise against purchasing that property. I think you always want to also mitigate risk. We're in this business to make money, but if you can't convert it, i.e. something happens, short-term rental regulation happens and they just cut everybody off, you need to have somewhat of an exit strategy outside of selling that property, and it needs to be cash flowing as long-term rental. So that's my number one red flag.
And so, are you talking about some of those more unique, I would say, like the treehouse rental and the boat rental, the boathouse, stuff
Yeah.
like that?
So that's unique, and I do my kind of investing thesis. I stay away from that stuff, not because I don't love them, and they can be absolute cash cows.
Right.
But for me and my portfolio, and the number one game of what we do is protecting investor capital. And I need to make sure that if everything absolutely goes wrong, we're still saving an asset because we can put a long-term tenant in there and it's still going to cash flow. And in that situation, a treehouse rental, you might be making 200, 300 K in revenue a year. But if God forbid somebody like Texas, or probably not Texas, but let's say New York, they say we're not allowing this anymore and they pull your permit, like that goes to absolutely zero. And I just never want to put my investors or even advise anyone to invest in something that really has catastrophic results.
Yeah, that makes sense. You want that flexibility in case anything goes wrong. All right. So, what is a myth about this business that you would like to set straight?
For sure. So Airbnb bust. It is what's always trending when you talk about short-term rentals. And while there are people probably not doing as well, I think people need to have some perspective, right? Like, they're generally comparing to some of the hottest times, 2001, 2002 in Airbnb history, where you could buy a property probably on the swing of their appreciation. And also too, Joshua Tree is a great example in California where you could buy a property out there and probably put it on the market and have average daily rate of $1,000, $2,000, $3,000 a night. But then as market equilibrium happens, it comes back to normal. People are shocked that they're only able to get $300. But that's really not a bust to me. That's just not buying good deals. If you're a good operator in this marketplace and you can figure that out, you'll do well. So that's the biggest benefit.
All right. And finally, what does success look like to you?
Yeah, for me, it's being with my family. It sounds cliche, doing what I want to do, right? So I'm a hustler. I love to work. I try to fancy myself at STR David Goggins, man. I'm up at 4:30 every morning. I work out every day. I work hard in my business every day, and I like to spend time with my family. Real estate has provided me that, and that is what success is in my eyes. So scaling that, continuing in this kind of journey.
Awesome. Well, hey, Justin, it's been great having you on. Please tell our guests how they can get a hold of you and if you have anything else you'd like to share with them.
Awesome. I appreciate it, man. This has been fun. I love reaching out to fellow vets and speaking to veterans as well. So if you want any information, and particularly on my journey, I have an ebook called Anchor to Success. It's on my website, lestermorecapital.com. Also, I would love for anyone that's listening to join our free Facebook group. It's Airbnb Millionaire. It's on Facebook. You just have to give some quick information, answer a few questions, and join completely free. And then also too, follow me on Instagram, LinkedIn, all the socials. It's just my name, Justin C. Mosley, and you'll be able to find me.
All right, awesome. We'll definitely have all that information in the show notes. Hey, Justin, I appreciate you coming on and look forward to continuing to see you do big things on your journey to multifamily millions.
Awesome. Appreciate it, my friend. It's been fun.
All right, thank you.
Take care.